Hi there, and welcome to the Mortgage Minute. I'm Patty Sanders with Berkshire Hathaway Home Services, and today our special guest is Sarah Hundley, and Sarah is with the PenFed Credit Union and specializes in mortgage. And I happen to know Sarah very well. She's been in the lending industry 20 plus years now, right,
Yes.
Sarah? So she has seen a lot, and so she's going to share some of her wisdom with us today. And I have a question for you. So we all know interest rates have risen a little bit. And if we have a customer that wants to still buy a home, everybody has to, still buy and sell houses all the time. So what is maybe a strategy on how they could get a lower interest rate than what we're seeing in the news and things like that?
Yeah, absolutely. So I am seeing a lot more contingencies right now. So we do have those buyers that are still wanting to buy regardless of the interest rate. And we spend a little bit more time with them now because they are selling their house. So we've been very creative on how to put maybe more money down. And also if the seller on the house that they're buying is providing a credit, we're using that for buy down rates as well. So they can get a little bit lower rate on their mortgage, but still be able to buy that house that they want to buy.
Okay, so you use the term buy down rate. Is that the same thing as one might see in an advertisement, points?
Yes.
That's the same thing. Okay.
Yes. So typically a lender likes to price or give somebody a rate at a no cost, but we do have options where the buyer can pay points or pay money to that lender for a lower interest rate, which essentially would give them a lower payment.
Okay. So as part of negotiating to buy a house, would a buyer be allowed to ask a seller to pay those points to help them with their interest rate?
Yes,
Okay.
absolutely. So you can talk with your agent about that. They are the expert in that field to negotiate that, but that is very common for those funds to be used to buy down points to lower that interest rate.
Okay. And earlier you also mentioned putting more money down and things of that nature. What are some of the things you're seeing some of the buyers do? Where are they finding the money to put down?
Yeah, so it's very common for contingency. So you're selling your house, you're using the equity funds that you have to put down on the new mortgage. Or maybe we're using that money to pay off a debt so that you will have your payment that you'd like. And then also if they have money in a 401k, that's acceptable. There's all different types of sources that are allowed to be used on a mortgage, depending on what loan program you're going with as well. So we do look at their entire picture to see if there's other avenues for down payment other than just the sale of their current home.
Sure. So, back when you and I started in the business, everybody kind of fit into a box. And I think in today's world, like you said, it's a whole picture. And so it's customer to customer, what situation is best for them.
Yes.
Correct?
Yep.
So you can work with those customers to find out what all their resources are and how they're best used.
Yes.
Yeah.
And we always strive at PenFed Credit Union to have the lowest rate, of course, and we don't have origination fees, so that helps their bottom line that their money is not going towards more fees, but actually going towards their loan, which is obviously a benefit. For down payment. So more money down means lower payment.
Right.
Yeah.
And the better the interest rate, the lower the payment too.
Yeah.
So
So we're very good at maneuvering those figures around to get them into the house that they like.
All right, awesome. Well, thanks for being with us today, Sarah.
Thanks for having me.
Yeah, and if you'd like to reach out to Sarah, her information is below. She has a lot of years of wisdom. She can answer any questions you might have. So once again, thanks for being with us on the Mortgage Minute.
Thank you.
Thanks, Sarah.